one of our clients just down the road here that was letting his kids kayak out in the cornfield.
Welcome back once again to the Comstock channel. I'm Marlin Bohling with you. I'm joined by Eric Relph of Comstock Investments. All right, Eric, we are now heading into a 3-day holiday weekend. And given the tumultuous trade that we have had in the grain markets here in recent weeks, the stage is kind of set for, once again, when you have a long holiday weekend, sometimes that can mean a change in trend.
Right.
We have a lot of horses at play right now, and a lot of it has to do with the weather, doesn't it?
Absolutely. Yeah, there's stories all over the country, and you don't know what you're going to hear from one person to the next. It's just almost comical when you start having conversations from Texas to central Minnesota, and the different stories you hear is just incredible.
We have heard that in a lot of areas, corn's all in. Sometimes soybeans are all in. Things are looking pretty good.
Yeah.
But in a lot of areas, my goodness, Eric, I've seen pictures of corn ground that looks more like you should have a fishing boat out there.
Yeah.
This is kind of weird. And it's not just a real small area either, is it?
No, that's right. Actually have a client and subscriber from Southeast Kansas who is mostly retired. The kids take care of the lion's share of the work, and twice a year he goes out and drives the country. He will drive from Southeast Kansas over through Tennessee, up through Kentucky, Ohio, and then come back this way through Indiana, Illinois, Iowa. He always stops by the office on his way home on that round trip. And he stopped by just yesterday and he said, I've been doing this for a lot of years and I've never seen so much water all through here. And so it is wider spread than maybe we thought. Here locally, it's just horrible. We've got photos and videos of some of these fields that are underwater, have been underwater for weeks. And it doesn't appear that it's going to be stopping. And even Eric Snodgrass with Nutrient Ag, who's one of the most followed ag meteorologists or weather climatologists in the country, he just flat said recently, I was wrong. This thing is not breaking, and it doesn't look like it's going to break for a little while yet.
Well, now that's interesting. You said that farmer was from Southeast Kansas.
Yes.
A lot of people watching this are going to say, oh, wait a minute. Kansas is bone dry. What's the deal? Now, Kansas seems to be divided into extremes in the southern half of the state there. What's going on?
Yeah. These systems have been building in central Oklahoma, working up even as far south and west as the Texas dividing line, basically on the east edge of the Texas Panhandle, and then working their way up. And Southeast Kansas in particular, but most of Eastern Kansas has had more than their fair of rain. And actually, the town that he's from, Fort Scott, Kansas, they had one rain system that came through and dropped 15 inches. And there's been well-publicized photos of the sale barn there in Fort Scott underwater, and they were having to move cattle out of the holding pens and into the sale ring to keep them elevated and keep them out of these floodwaters that occurred there before their Saturday sale. And so, that region, they're more than wet. And you go to extreme western Kansas, particularly northwest Kansas, they're going to tell you a very different story. And so it's really a tale of two halves. And the eastern third is how I would probably categorize it, has had plenty of moisture. But that is not the heart of the HRW growing region. As you well know, Marlin, the bulk of it, the acres are out in the western 2/3. So there's definitely a story there, and I don't know how this is all going to play out, but we're hearing some surprising wheat yield stories, and things could come through, and maybe we will be shocked, and that Kansas wheat tour won't be wrong.
Well, and I'm glad you mentioned that, because I did have a chance to do an interview with one of the custom harvesters in around the Wichita Falls, Texas area. And I want to encourage everybody, if you want to go back and check out the podcast from Thursday that we had here on the Comstock channel, we talk about what they found. It was kind of surprising. He alluded to the fact that the yields are quite a bit better than they have had for a long, long time there. Now, it may be a totally different story in western Kansas, but now one has to wonder just what the market setup really is. I mean, we've jacked up the prices a lot in the wheat market here over the past few weeks. We've gained $1.50 or more. And I mean, harvest is underway, Eric. and if you have reports like that make it to the mainstream media over the weekend here, it just makes you wonder how many more opportunities you're going to have at a decent price on the wheat.
And if HRW beats trendline, we've got a real problem on our hands because USDA is already pegging us at 200 days of use for an ending stock after this crop year. And so the HRW, by all accounts, is in plentiful supply. And if we supersede trendline yield and have something outrageously high in a lot of these areas, that could really dampen that market. SRW, you had the state of Illinois comes out and they're looking for 104 yield in Illinois for the SRW wheat. That would be an all-time record by almost 10 bushel. I mean, this is just this is set up, and I wonder if we're not looking a gift horse in the mouth right now with some of these wheat prices.
So let's talk about the corn then. It used to be corn and wheat were pretty closely tied together. Is that the case anymore? It doesn't seem to be.
Not as much. No, there's not as much forgiveness and feed ration to where you can flip flop back and forth. You used to pull demand from one versus the other, and now there's so much forward contracting and nutrition work that has to go into any kind of a switch that you just don't see a lot of it anymore. Whereas decades ago, you'd switch, you'd feed whatever was cheaper, and you'd make the ration work, and you just don't see as much of it anymore. And I wonder if it's just not the heavy commercialized cattle feeding that we do nowadays versus back then.
What about the South American factor when it comes to corn and soybeans right now? Have things changed very much or not? We still have that big disparity between USDA and CONAB, for example, on the beans.
Yeah, wide gap there. And I think there's just an expectation that the USDA has to fix it, that it's on them to fix it. And I think the USDA is going to slow roll that as much as they can. Now, on the case of the safrinha corn in Brazil, that's we've heard kind of double-edged sword there. We've heard some areas that have a great story to tell and they're expecting record yields, and then other areas have tremendous issues. And so that could be a tale of two halves again. And then how close to average do you come, and what does trend line look like there? And that's all going to take another 30, 45 days before we start to get some kind of a feel for that. Meanwhile, they're shipping their soybeans, and that harvest is ultimately complete, and the flooded areas are lost, and what's out there is out there. And so the problem that, from a record keeping standpoint, I mean, a third of the country's beans are gone before they're 3/4 harvested. And so there's really no way. It's not like they're dumping it all into a bucket so they can measure it. It's moving out of the country as currency almost immediately. And so it's hard to tell. Is CONAB right on the money? Is USDA way too high, or is it somewhere in the middle?
I've heard farmer selling was really aggressive down there.
Yeah, very aggressive on the soybeans. And in the case of the safrinha corn, there was a lot of ground, and I don't think this has hit the market yet because I don't know that we can verify it on a larger scale. But a lot of them didn't even plant the safrinha corn because it just didn't pencil. It wasn't worth the inputs to put it out there. And so if they can't make money doing it, why do it? And I know there's a lot of them that opted not to. I just don't know how much of that is in the market yet. I got the feeling that it's not very much, and we still have a long way to go to bring that to reality.
And again, I want to encourage you to like this video, subscribe to it by clicking that bell icon down below, and share it with others as well. And we thank you for your support as our audience continues to expand. Well, on a related tangent, you talk about the exports. Corn exports are running ahead of where they thought they would be, right? But soybeans are just kind of a fraction of what they should be. Does that mean corn is kind of a dark horse right now?
It kind of feels that way. When you talk about the issues with the safrinha crop, you look at the export sales, look at feed usage. The ethanol grind's been impressive. I feel like corn quietly has built a story, a multifaceted story for higher prices. And the one thing that we aren't able to acknowledge yet, because it is too early, is the problems that we're having in areas like this here in Northwest Iowa, where we are wet. We kind of talked amongst ourselves here locally with a couple of producers in the building because they were asking questions, because we also do crop insurance. And so they were asking questions about late plant, replant, and prevent plant. We've just had a steady flow of people through here. And so while they were in here, we were talking, and I think we all estimated that here locally, we're about 60% planted on corn and about 20% planted on soybeans. So we're way behind. And this is $27,000 an acre ground in this region. And this is the best of the best. There's a lot of 260 APH corn farms in this region. So when does the reality hit that this stuff was widely mudded in conditions that I had one client tell me he felt like he needed to go to confession because he committed sins in the field. And so this was not put in good conditions and not put in a proper way. And when does the agronomics start to weigh into that, and how much yield is taken off because of these conditions? And do we get more rain in the next 24 hours, which we are forecasted to get, and then next Tuesday again? And now we're prevent plant in a lot of areas, I believe.
My goodness. Yeah, there's a lot to consider. So, all right, if that is the case, does that change the way you're approaching your marketing on the corn now?
It does. It has to, because those that are planting don't know if they're going to finish. Those that haven't don't know if they're going to take prevent plant. And so you don't have any idea what kind of bushels you're going to have. You know what your crop insurance guarantees are, but you can't sell crop insurance guarantees to an elevator. And so, you have to really be cautious on physical sales. Now, if you assume you're going to get a certain amount done and you want to do it through futures or options, those are out there. Those are paper as well. You can trade paper for paper, but can't deliver a crop insurance indemnity to the elevator.
Let's talk about the demand side a little bit. For one thing, we're going to be getting fairly close to a new WASDE report that'll be coming out in early June here.
Yeah.
And I just wonder how much of a factor the feed demand will be this year. With the high prices of cattle, that seems to indicate that there just aren't that many around. Does that mean USDA is going to have to cut back on their feed usage of corn?
I've been thinking that should be the case for a while, and I was just dead wrong. We do have cattle on feed report coming out this afternoon at 2:00, so all eyes will be on that, see what those numbers look like. The big debate right now is, are we retaining heifers for our breeding herds, or are we sending the heifers to commercial feed? And so far, I would say that we've retained whatever heifers are needed short term that are being bred or have just been bred, and the rest of them are going on feed for slaughter. And I've not heard a compelling argument against that, because these prices are so high. They're going to want to cash those tickets, and there's still herd dispersals going on all over the country, and my guess is we'll continue to see that probably through the end of this year, because those that rode out the last cycle where we made the 2013 high before the 14 collapse, there was a window there where they had an opportunity, and I don't think they're going to miss that this time.
Of course, this past week, we heard that there was another human case of H5N1, and the cattle market, by and large, seems to have kind of shrugged it off.
Yeah. You've got extremely bullish estimates for this afternoon's report that really help prop the market midweek. And I think those expectations fail to meet a lot of times. And so I'm anxious to see if this report later will meet those expectations. And the interesting thing about it is, with the 3-day weekend coming up, we can't trade the cattle on feed report until Tuesday. And so we've got this extra day, and it's Tuesday morning at 8:30 before you can even react to it. The good part about that is it gives people a long alcohol-filled weekend to forget about it before we get to Tuesday and have to do something.
Yeah, exactly. Yeah. That's well put. I like that. So how closely tied is the cattle market to the economic data that keeps coming out all the time? A lot of folks are really worried about that.
It's quite close. I've heard stories, and I can't verify because I haven't been in the industry long enough, but I've heard stories that maybe you can verify, that the cattle pits were right next to the equity pits back in the day. And so there's always been this correlation. It used to be based off human energy on the floor. And now it's just because the way it is, because of what was going on 20 years ago. But if you look at the chart, I mean, look at cattle, you're making a significant high here in most cattle contracts. You got every deferred feeder cattle contract is above the highest price we've ever seen front month feeders, and by $10 or more in most cases. You've got 195-ish April fats that We get into these areas as we do get to 195, 196. We're going to see people cheating the prior high, where we saw the April 24 get to 199, and they're going to be pulling the trigger on some hedging there. And this all coinciding with an equity market that's pushing all-time highs. We saw the Dow hit 40,000 for the first time. Fed chatter is going to be a big influence, and we have to keep in mind it's an election year.
Well, plus, can't leave out the lean hogs. I mean, how far can we stretch that bungee cord between cattle and hogs as cattle continue to rocket upward and the hogs just look like they're just falling right off the table?
Yeah, the founder of Comstock, David Cruz, he has been beating that drum for 2 years, and I think he's about wore out. Eventually, pork has to present itself as a value product, and he always refers to it as a recession meat. And you would think that would be enticing some buying, but personally, I haven't had very cooperative weather for the grill up and barring a day or two up until now. And so I'm ready to start working through some of the steaks and get some beef tenderloin going. But eventually, yeah, you burn through that, and then the pork can kind of take over as a value alternative. I will say I'm feeding a bunch of people this weekend, and we're going pork. So we're already making that shift. I'll feed myself the beef tenderloin, and they can have the pork spare ribs.
I did notice personally in the big box stores that I've had a chance to be in here lately, seems to always be a bit of a line in the whole boneless pork chop segment of the meat case.
Mm-hmm.
Steak line, not so much. It's
Right.
a little thinner over there, and I guess you can understand that because you almost have to take a mortgage to get that.
Yeah.
So I don't know. You would think sooner or later that's going to be a drag on the cattle market, just because of its competitive factor here.
You would have to think so, especially when, we're staring down $3 select cuts right now. Hell, we were trying hard to keep $3 choice up until last week. And all of a sudden choice blows through, it goes to $3.16 or $3.18. You have almost a $19 jump in the choice in a single week. And then to start this week, select's up over $3. So yeah, eventually you have to be curbing demand. I just don't know at what level that occurs to the point where we start to see it reflected in the cattle market. The stories I'm hearing right now are that the packers are still hot after supply, although they'll tell you they're not going to keep paying these prices. They're just going to cut back on the kill.
Well, I know you're one of the representatives that can issue LRP contracts, and I just wondered how that's actually working out this year. Is it a benefit?
For many, yes. It always depends on where you put it on, but the one of the really attractive things about LRP is you put your coverage on based on the futures price, and your indemnity is determined based on the cash index. So there's all these times where we see a carrot hanging out there, whether it's 2 months or 6 months or 8 months down the road. We're going, man, I hope it's still there when we get there. Well, this is a way to make sure it is.
Did I hear correctly? You're actually going to be conducting a meeting talking about that coming up?
Yes. Yeah. Actually, I've got a few coming up, but I think the one you're referring to and the one that we've put out is on June 6th in Ankeny, Iowa.
So what's involved in that? What are you going to talk about?
Basics of LRP, how it works, some real world examples, some actual numbers, of course, no names included, but some real examples of how both sides of it have turned out. Those that just had to write the check for the insurance and what their cattle brought versus those that sold the cattle and cashed an insurance check because they put coverage on it at levels that worked out for them on the insurance side. And, the cattle still brought good money, but it wasn't what they had hoped for. So the insurance helped supplement it and got them square. And so we'll go over all that and not a long deal. We'll probably be together for a few hours on the 6th there and provide lunch and let everybody learn a little bit and hopefully take something away from it.
So that's actually not very far away. Is that sold out already or not?
Not sold out. No. The numbers have increased a lot this week. And so I think people were kind of waiting to plan Memorial before they committed to anything the next, week, basically. And this is the Thursday after the week of Memorial. So we've got Memorial next week, and then this would be that next Thursday. So we're a couple weeks away. We're not full yet, but we have seen a peak in interest here in the last few days. So
can somebody still contact you about it or not?
Yeah, sure can. They can either call the office at 712-227-1110, or they can email info@comstock.com.
Oh, well, that sounds like a cool deal. Keep me posted on how it goes.
I will.
And maybe we can share some information from it or something down the road too. So
Excellent.
that would be great. Quick question before I let you go here for the holiday. I hear a lot of talk about comparing this year to 2019.
Yeah.
Is that actually a valid point, or how is it different?
I think on a national level, it's probably not overly valid, but regionally, I think there's areas that are much worse. I've heard a lot of people refer to 1993. Now, I wasn't in Iowa in 93. I was only 12 years old, and I was still doing what my dad and grandpa told me to do. So I can't really speak to it too much, other than I probably couldn't cross the creek out behind the outhouse at that time. But 93 has probably been the one that I've heard people compare the most to. What I can tell you is there are fields flooded all over the place. There was one of our clients just down the road here that was letting his kids kayak out in the cornfield. The Little Sioux River running through this region of Iowa has been out of its banks for weeks. There's just huge flooded areas. And I'm actually anxious to get up in the air this afternoon and kind of see what things look like from an aerial vantage point.
Eric, you don't know how painful that is when you said you were 12 in 1993. I remember that well, as I always called it the year without a summer. I believe that was after Mount Pinatubo erupted. And in Kansas, it never got above 90 degrees. That was the only year I know of like that.
Wow.
And it just rained and rained and rained. And the year before was so dry, they said the lakes would never be filled up again. And that year, everybody was afraid the dams were going to blow out, especially like Tuttle Creek in Manhattan and a bunch of big ones like that.
Yeah.
Oh, the memories. Anyway, thanks for bringing that up. I wish you all the best. Thanks for the info, and have a terrific Memorial Day weekend. Be safe out there, and we'll talk with you next week. All right.
Sounds great, Marlin.
Eric Relph of Comstock Investments with us. Well, that's going to do it for this episode, and I hope you have a very safe and happy Memorial Day weekend. And take care of yourself. For producer Breanne Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.